Of all the patterns out there, expanding triangles are the most tricky ones. Welcome to the nightmare of every trader in the financial world. First, these triangles are extremely rare, even on the currency markets. Second, they are misleading because each leg of this triangle gives the impression that it is not a triangle but something else. You are always being under the impression that a breakout is falling, only for the price to reverse in the opposite direction and leaves you with scratching your head. A quick difference, let's say, between a contracting triangle like we saw in the previous chapter and an expanding triangle is that while in a contracting triangle the first leg is always the longest and all the next legs that come are shorter than the previous leg, in an expanding triangle usually the first leg is the shortest one and all the legs to come are longer than the previous leg. It is possible also in an expanding triangle that the B wave to be higher than wave A, but this is only an exception. If you were to put, let's say, a shape on this expanding triangle, where an expanding triangle looks something like this, with an A, let's make this one black. So this is the first leg of an expanding triangle, A, which is the shortest. Then the next one should come like this, the B, and then the C wave, making only a marginal new low, only for the price to reverse to the upside, making a marginal new high, only for the price to reverse to the downside and making another marginal new low. And this is being called an expanding triangle. This is your triangle. And they are extremely rare. What you have in here, this is a 1 hour chart on the euro dollar, and it is actually quite an updated chart, as it is right now it seems that the price is doing this kind of a structure. It is too early to say, but at least it resembles this structure. Now, an expanding triangle, it is to be found usually at the end of a B waves of a correction of a higher degree. So in this case, signals a move to the upside, so a continuation. Anyways, try to think of trading this pattern, because the expanding triangle actually begins in here in our case. And I might say that this is wave A. And then the B wave, and you see the B wave makes a new high compared with the recent high. So this was the recent high, wave A, and then the B wave makes a new high. So this is wave A, and this is the B wave, and then this is the C wave. And if you take a look at where the price turns, well, actually it turns right below the end of wave A in here, so making only a marginal new low, only for it to reverse sharply. So you have the impression that this is a break. Well, it is not a break. Guess what? We are reversing and making a new high compared with the previous one. And this is the C wave in here, and then reverses makes a new high compared with this one. So this is the D wave. D wave in here, only for the D wave to be, by the way, reversed, making a new low compared with this one. So exactly what we had yesterday with a sell-off on the euro dollar, and then A, B, C, D, E, bam, this is your triangle, and I would not be surprised from this moment on the price to go to the upside, and this being only the end of a wave of a lower degree. So the original move to be actually this one. So the price coming from the downside like this being let's say one leg to the upside. Let's make the color blue, consolidating in the triangle, and then continue continuing from here, exiting the pattern in the same direction. So your triangle would be like this. So A, B, C, D, E, contract, expanding triangle, and everybody it is just wondering what the heck is going on. Now let me mark also the end of the triangle in here. So this is the end of the expanding triangle. Let's take a shape so that we know what we are looking for in here. So this is being called a expanding triangle. Expanding triangle, and an expanding triangle usually it is to be found in B waves of a higher degree. That means continuation pattern. It is extremely rare for, first of all, these structures are extremely rare. They are hard to be found. Second, it is extremely rare for such a triangle to actually signal the end of a wave. So they are to be looked at like intermediary waves, like continuation patterns. One of the strangest aspects of such a triangle also appears to be the lack of Fibonacci relationship between the legs. You see, for example, the longest leg, it is the E leg, which is seen here, the E leg, and it has no proportions whatsoever with the previous leg on the same structure. Whereas in the contracting triangle you have all kinds of Fibonacci relationships between the legs. For example, in a contracting triangle, all the legs that follow the first one retrace at least 61.8 out of the previous leg, and the retracement going most of the time towards the 75–80% area. In here you have nothing. Another characteristic for this for this triangle is that the last leg, meaning this E wave leg in here, the longest one, has the tendency to blow off, being much longer in price and time than the other way. So look at wave A in here, this is wave A, and take a look at the E wave in here. So price has the tendency to blow off for this kind of a triangle. Now, to be honest, I don't really know if this structure in here it is an expanding triangle in the makings. It depends very much if the lows in here on the E waves on the E wave are holding. If not, probably it is something else. But as it looks now, it should be taken into consideration. So when you are trying to analyze markets and you are seeing a pattern that it is developing in front of your eyes, you should look at the clues that you have. And in here, the clues are that each low and each high it is being taken only for the price to reverse in the other direction, and this points towards an expanding triangle, even if this kind of a triangle it is extremely rare. As a book recommendation for this kind of a triangle, this being a complex structure, I would go for the Glyn Neely and Eric Holt book, The Mastering the Elliott Wave. A lot of examples in there with complex corrections and expanding triangles and also contracting triangles. So feel free to appropriate. Next chapter it will deal with finding support and resistances areas into a chart, and even though support and resistances are not reversal patterns or continuation patterns, or as a matter of fact they are not a pattern for trading, but they should be taken into consideration all the time when you're looking to analyze a price section, a chart. So until next time, stay safe from the market and trade.